Either one, but I do to the cloud.
Okay, so I'm now recording to the cloud.
I can edit. You'll be fine.
Okay, so I'm letting people in. I'm gonna turn off this waiting room. Where's the waiting room? Welcome everyone. Welcome, welcome. Excited to have you guys here. Oh, you guys are nice and quiet. You can say hi if you want. We're gonna get started in a few.
Hello.
Hello, hi Regina. Welcome everyone. You can put in the chat where you're logging in from. You know, I just love Zoom because I feel like every time I'm on here, I have to look all over again on how to do one little thing. Trying to just turn off the waiting room, but I don't see anywhere where I could do that. And I've done it a million times. Anyone has any suggestions? Hey, Alicia.
Yes.
Do you want to be in charge of letting people in? Because I, for some reason, cannot see where I can turn off the waiting room so everyone can just come on in here, and people are flooding. They're flooding it. They're coming in fast.
Perfect.
And I'll continue to research. Welcome everyone, welcome, welcome. You're in the right place if you're looking for ways to save your coins.
All right,
We're excited.
sorry.
Quick question.
Oh, did you turned off the waiting room? Awesome.
Quick question, Michelle.
Yes.
Is this being recorded?
Yes, we're already recording so
Great.
that I won't forget when we get started. So we're recording right now.
Awesome.
So smile if you're on camera. Welcome everyone, welcome, welcome. We'll get started in like one more minute because I know.
Play. There we go. Recording.
Thanks for catching that.
Of course.
Hey, Deidre. All right, I'm giving shots out to everyone, but you know what? We're gonna get started because we don't want you guys to miss a thing. So hold on one second. Oh, no, we'll start like this. It's good. So welcome everyone to our event, which I'm just like so excited that you're on here and wanting to learn. My name is Michelle Fletcher, and I am being joined by Alicia McDonald. We recently learned a few weeks ago some amazing information by an expert, a tax strategist, and it just blew us away, totally blew us away. But we're really grateful that we are in the place where we have been able to implement what she teaches tonight. And so I feel like Alicia, who I get to partner with, has been a true testament to a lot of the things that she shares. And so I wanted Alicia to share really quickly her experience with what we're going to be discussing tonight, ways to save in your taxes and how you can do this every year just by doing this one simple thing. And the one simple thing we both did was we started our own home-based business. Our home-based business is Juice Plus. It's one of the best that you could possibly join out there. And I'm going to tell you why in a second, but I'm going to have Alicia just share her experience of being a part of this home-based business for the past 2 years.
Yeah, thank you, Michelle. So yeah, it was a part-time opportunity for me joining the Juice Plus business. And I was a W-2 employee. And then pandemic hit. What was a part-time opportunity turned into a full-time opportunity because I was furloughed from my W-2 employment. And it was just absolutely incredible to see exactly how much more tax savings I am receiving and my family is receiving now as a home-based business owner. So someone was so kind to share this video, and the moment I saw it, my husband was so blown away that he decided right away to sign up for the business. The next thing we did was also schedule a tax strategy meeting to really learn. And it's just incredible. This woman's going to go over a lot of information. This is a good time to just set that time to just fully focus and learn on the training that she's about to provide. But Juice Plus has been the business that has benefited our family from acquiring whole food nutrition, fitness goals, more time with family, a strong community of like-minded people. I've just gained so many benefits from start to finish just by joining this mission. And now we have these tax saving dollars that I had no idea about, to the point where I'm revising all my taxes done for the last 3 years, as a matter of fact. So I'm happy that I no longer have a scarcity mindset. A lot of people are very afraid, and that maybe were raised the way that I was, which was you work your 9 to 5 as a W-2 employee, work for corporate America until you retire, and then you enjoy your American dream at retirement. We don't have to live that life anymore, guys. We have the opportunity to do it now, running a home-based business and really being savvy about how we handle our finances. So thank you, Michelle, for allowing me to share that tidbit. And I'm super excited to watch this video all over again.
Thank you so much, Alicia, for sharing your experience. I mean, when we both watched it together and we realized, it was just like, wow, it's amazing. And so having a home-based business, there's so many other perks to having a home-based business, whether you're a part of it for the community, for the amazing products that you get to share with others, or even if it's just for making some extra income. But what we have learned from just listening to this is it is truly hard to get ahead without figuring out the whole beating the tax system. And so having your home-based business is definitely one way that you can help to beat the tax system. You can plug into a lot of the tax benefits that major corporations are able to tap into. So really quickly, I wanted to share with you what Juice Plus is as a company. So I'm going to share my screen before we get started and share what this opportunity is all about. So Juice Plus is definitely, our company gives you the ability to earn some extra income with very low investment. So it's already very low risk. Can you tell me if my internet is unstable? Am I good?
It was a little bit.
Good. Okay, thank you. Okay, I'm going to continue, and then I'm going to plug in an extra cord. It gives you our business gives you the opportunity to work at your own pace, anytime, anywhere. You're able to inspire healthy living amongst your family, your friends, your community, and you'll be fully supported along the way. And then we know that the health and wellness industry is a moneymaker. When you look at this screen, you see that there's a lot of things that are making money, but what is making the most money overall is global wellness. It's at a whopping 4.5 trillion. So whether you are a part of this industry or not, people are buying things in this industry and have a need for it. And why not join one of the best companies out there that offers natural solutions that is solid and lasting? You know, it just makes sense. And here we know that the gig economy, after last year, we know that it's here to stay. There's people that are looking for all these various ways to make extra income. But, you know, if you join a business like Juice Plus, you know that you are not only making additional income, but you are, in the long run, helping your family save so much more money than just what you're adding in by sharing this mission with so many others. And so Juice Plus, we are a unique product line with all vegan products that allow you to get more plants into your diet every day. We meet essential needs, which is plant-based nutrition. Everyone needs to be eating more plant foods. We have the best of the best. We are the #1 researched nutritional product in the world. We are as close to nature as possible, minimally processed. We have research that backs up that our product is pretty amazing. Over 40 clinical studies done by leading universities and hospitals all around the world and within the country. And then we also have the NSF certification. The quality of our product is second to none. That's why we have over the years had so many Olympic teams that have used Juice Plus as their primary supplementation because of that NSF seal. They have very strict guidelines. And so we know that the quality of our product is just one of the best. And so that is all about Juice Plus. If you want to learn more, definitely get back to the person who invited you on here tonight to learn more about Juice Plus and the company. And now we are going to get into the recording from this tax strategist, which you are going to want to get a notebook and a pen and take notes because it is that good. And let me start that recording. Give me 1 second. So I am not playing the full video tonight. I have cut it to where she starts a little bit of her background so you can understand who she is. And then she gets into the meat and potatoes. I'm telling you, even if you stay on here for 30 minutes, you guys are going to get a lot of nuggets. But once she starts talking, it is hard to pull away. She just shares so many good things. So here we go, guys. Get ready. And give me a thumbs up, Alicia, if you can hear.
Their business and grow their mindset. So I live in Greenville, South Carolina with my family. We have 25 employees that work here in our facility in Greenville, and we have about 6,000 square feet here, but we have clients all over the entire country. So we're not limited on state. We have clients in every single state, which is pretty awesome for us. And we have every single industry. So it's really great for us to be able to see what's going on in the world today based upon all of the different industries. And I was, yes, just exactly what Jennifer said. I was in the network marketing space for about 3.5 years. I did a lot of that full time, and I did accounting on a part-time basis as I was growing my accounting practice back up. And the reason why I did that is my parents got me involved in a network marketing company because I lost my business about 10 years ago. I put it up for sale, and the guy I sold it to stopped paying me after 4 months. And so I was in a place where my mindset was broken. I was broke, and I couldn't start back because I had a 5-year non-compete in the entire state of South Carolina. And on top of that, I didn't have the money to start back. So it took money to grow an accounting practice, and I knew that, and an insurance agency, and I wasn't capable. My parents got me involved in a network marketing company. It changed everything for me, and the reason why is because it allowed me a new environment of people that were positive, that helped me through a lot of my issues. And that's where I truly learned about the network marketing industry and how beneficial it was to have some sort of home-based business. See, I ended up saving someone in that first company I got involved in $4,100 more than they'd ever gotten back on their taxes. And prior, they were a W-2 employee. And then when they became, I think, a nurse and an engineer. And so when I did their tax return the next year, when they added on a home-based business, it actually saved them $4,100. Now, they were not very successful in the company at that point in time, but they did end up becoming after they got that money back, because they used the money to utilize the product that they were selling. And then when they went and used the product, they started sharing it with people and massively growing the company. So it's pretty awesome. But as a business owner, my whole entire life, since I was, 18 or 19 years old, I've owned businesses. And so I didn't realize the massive benefit of having a home-based business until I saw someone who didn't have it before. And then I was able to compare those two. And what ended up happening is I did over 900 tax returns while I was involved in that company that were W-2 employees before and W-2 employees in home-based business later. And what I was able to find is that I could save someone $4,000 to $7,000, typically even $8,000 a year in taxes by having a home-based business. So why is that? One of the things I want you guys to understand is there are two tax systems in our country, if you don't already know that. There is a tax system that was created to steal wealth away, and there's a tax system that was created to provide wealth. That first tax system was meant for the W-2 salaried employee. So literally 40% of every dollar that a W-2 employee makes, and sometimes upwards of 50%, goes to pay some sort of taxes. FICA taxes, state taxes, local taxes, income taxes, sales tax, gas tax, all of that, okay? So here's the problem with that. When you combine tax, or when you take taxes and you combine food, clothing, housing, and transportation, all four of those together, you'll actually pay more in your lifetime on taxes than food, clothing, housing, and transportation. And most people believe they have no clue that taxes are their number one expense. And so if you don't figure out a way to save money in taxes, you will never get ahead in life. I mean, you just truly won't. So it is the greatest path to wealth. And so the second tax system, which is the business owner tax system, that was created to provide wealth for you. And the reason why is because you're generating economy. You are hiring more employees. That is kind of the hope, is that Congress hopes that we'll hire employees the bigger our businesses get. And what they realize is that 70% of small to medium-sized businesses, or excuse me, 70% of employees are actually hired by small to medium-sized businesses. And companies like Amazon and Google and Microsoft, they all start in their garage. So it's super funny when people tell me, they're like, home-based business is not legitimate and the tax laws aren't the same. Well, tell me how in the world that could possibly be, seeing as how Amazon, Google, and Microsoft started in their garage. It all works exactly the same. And when you understand the rules of the game becomes fun. And if you don't know them, it'll cost you a lot of money. So the second tax system, that business owner tax system, how do you get in it? See, the Congress knows that if you are constantly replenishing economy, so you're selling, you are buying more stuff that's going back into the economy, and you're hiring employees, they have to give you some tax breaks. So the taxes shift off to the W-2 employee. So how do you get in that second tax system? I'm not telling you have to quit your W-2 job. What I'm saying is you just need to find a way to have some sort of home-based business, something you're passionate about, something you can share with people, and you can open your mouth every single day and have a conversation and say, this is what I'm doing. Because that's the way the network marketing industry works. All you're doing is telling people about a product or a service that you love. And so what I do personally is I work alongside speakers, coaches, trainers, and network marketers, and I free up money so that I can help people get involved in this industry because I love it. And I will tell you, I'm not in it anymore. I haven't been in the network marketing industry in 2.5 years. And the reason why is I'm a huge advocate for it. And if I stay out of it, people will listen to me as an accountant. But if I go in and build it, people will not listen to me. So it's more beneficial for me to stay out here and help you guys grow and build a business. So I help bring people into the industry that would never see it as a viable opportunity. I help them stay in long enough to win, and I help them keep more of their hard-earned money when they actually start making it. And that's why I believe the industry is for everyone. See, here's the thing, guys. Most of the people, and you may not know this, if I had known this in network marketing, it probably would have made my life a whole lot easier. But I didn't know these statistics until recently, is that 46% of the Americans don't have an extra $400 to their name. And 69% of Americans don't have an extra $1,000 to their name. That's why when you have a conversation with someone and that you know that they're going to be amazing, that they could kill this, that they would be, the greatest in your company, that's why they don't take the leap of faith, because they don't have the extra money. And so they do have it. We just have to teach them how to free it up through taxes. So you can actually increase, if you want to be in business and you don't have the extra money to do it, you can increase your W-4 exemptions on your paycheck. And 2 weeks from now or a month from now, when you get your next paycheck, you'll have enough money to get started. And so many people they don't understand that there are resources there. They're just not very resourceful. So at the end of the day, that's a huge deal. And why it's important to share with the world why they have to have some sort of home-based business. I'm not even saying they have to be in your home-based business. It's important to educate people why they have to have a home-based business. And the reason why is the average American household is going in debt every single year to work. And I'll show it to you. These statistics are actually that the average American household is going in debt $7,000 a year, but I want this to be believable for you. So I'm showing you exactly how it all works. So as a single and married couple, the average income per household in America across the board is $60,000 a year. Now, if you are a W-2 employee, you don't get any business expenses. So the only thing you're entitled to is a standard deduction or an itemized deduction. So going here, here's what's left over is your taxable income. You have taxes that you pay, the take home, and then you have cost of living. Well, here's the problem. The cost of living in America on average is $53,000 a year. I decreased it some for single. And you can see that the average American working 50 hours or 40 hours a week, 50 weeks a year to take 2 weeks paid vacation is going in debt $4,000 a year to work. And if you don't believe me, you can look up a website called usdebtclock.org. And it will make you sick. But if you go there, you can see that the average citizen in America is in debt over $70,000 a year. That's not a taxpayer. I'm talking about every man, woman, and child on average is in debt $70,000. That's the national debt per person, per citizen in America. So there you go. So these numbers are legitimate. They're actually higher than what they are, but I want you to see them. I took into effect single, that they do spend a little bit less. But, if you go and look up the cost of living in your area, where I live is $63,000 a year. In Atlanta is $73,000 a year. So people are constantly going further and further in debt. And the reason why this is important, guys, if the person that you are talking to and having a conversation with about your opportunity, if they are constantly going in debt, you have to figure out a way to teach them where the money is, because they can get it back. It's just in their taxes. So here's what happens. When you become a business owner, you now have advantage of what's called tax deductible business expenses. And so what are they? The IRS states that a tax deduction is any expenses incurred for the purpose of gaining or producing income. It's incurred with a reasonable expectation of resulting in future business, and it's reasonable under the circumstances. So what does that mean? That means if you're attempting to earn income today or in the future, and it's reasonable to you, then it's tax deductible. Now, I'm not telling you to go out and buy a jet if you just got started on your business. I'm not telling you to go out and buy a Bentley. What I'm saying is if you are truly attempting to earn an income and it's your intent to build a business and to make money, then that can become a tax deduction for you. So why that's important, here's the thing, and why I love home-based business so much and network marketing is because you can truly redirect your living expenses and turn those living expenses into business expenses by doing something called daily business building activities. Well, what are living expenses? The whole purpose, the reason why we live every day is to be able to buy the things that we want, the things that we need, right? Well, here's the thing. As a W-2 employee, you can only take advantage of tax deductions for things like that are called itemized deductions. So medical bills, medical insurance, here's the list of the things that you can take advantage of as far as you can itemize. Well, you can only itemize if you go above $24,000 a year in what's called a standard deduction. So if you're married, it's $24,000. If you're single, it's $12,000. If your head of household is $18,000. So unless you go above that number, there's no benefit to any of these expenses at all. And so many people are led down the path that, hey, you need to go buy a house, you'll have mortgage interest, you can write off your taxes. 96% of Americans are getting no benefit from buying a home, from giving to charity, from giving to their church. They're not getting that benefit. They're giving out of the kindness of their heart, and then they don't realize that they're not truly getting the benefit. So there are ways to get those benefits back when you become a business owner. And so I want to just tell you that information to make you feel bad. So here's the thing. I want you to understand the standard deduction before we move forward and why it's so impactful to be a business owner. Things like medical bills and medical insurance. You have to go above 7.5% of your AGI, meaning that's an adjusted gross income. So if you make $100,000 a year and that's your adjusted gross income on your tax return, that $100,000, you have to go above 7.5% of that in order to get $1 in benefit. So 7.5% of $100,000, that's $7,500. If you had, let's say, $10,000 worth of medical bills and medical insurance, you would only get benefit from $2,500. That $2,500 would go against your standard deduction and help you get to the $24,000 limit. So do you see that there's already a major problem? So that's capped. There's an issue there. Property taxes, sales tax, state tax, all of that. Yes, it can be a tax deduction for you, but you have to go above 10,000, or excuse me, it caps at 10 grand. Meaning that if you had $40,000 worth of property taxes and you had state sales tax, you only get $10,000. That's the max that you can get. You can't write off mortgage interest and charitable contributions. You cannot write off more than 50% of your charitable let me step back. You can't write off more than 50% of your income on charitable contributions. So if you made $50,000, you can only write off 25. So I don't think most people aren't in that category, but that's definitely, you've got to take that into play. So here's the itemized deductions. If you go above 24,000 standard deduction, yes, you're entitled to take whatever the difference is. But guys, you're still missing out on $24,000 as a W-2 employee. Now, here's living expenses. Everyone has them, but no W-2 employee gets to take advantage of any of these expenses at this point in time. So it used to be that you could add back some things like unreimbursed employee business expenses. That's no longer the case. So daycare, yes, you may say, well, I get daycare. I've seen people, have $20,000, $25,000 a year in daycare cost, and they get max $1,500 in dependent daycare. So as you're continuing to make more money, a lot of dependent daycare gets limited, earned income credit gets limited, child tax credit gets limited. So as a W-2 employee, it's almost like a double whammy. The more money you make, the more money they're just going to keep taking from you. Well, here's what happens when you become a business owner. You now can take advantage of all of these tax deductions over here that we just showed on the left, and you move those now into business expenses. So how does that work? Things like medical bills and medical insurance. Medical insurance is 100% tax deductible as a business expense if you don't have insurance through a W-2 employer. Otherwise, you can write it off. Obamacare, whether it's through, Liberty Health Share, MediShare, Christian Healthcare Ministries, all of those, you can write those off. Or it could be a group policy. All of those are 100% tax deductible as a business expense, but it can't be through your employer, cannot be through your employer. The medical bills, you can actually write off 100% of your medical bills as a fringe benefit. You would just need to put a plan in place. In anybody who has more than $2,000 a year in medical bills, this is definitely very beneficial for you guys. It will save you money. But that that fringe benefit allows you would pay your spouse $100 a month. They would in turn pay 100% of the medical bills, and then you would reimburse them, and that would be a fringe benefit for you. So huge tax deduction for medical bills. And we can talk about any of these details on a tax strategy session. I'll give you a link at the end of it if you guys want to book it. But property taxes, this will be things like, you pay property taxes on equipment that you buy for your business, vehicles. I have people that buy RVs, like we just bought a travel trailer on Saturday and a toy hauler, 44-foot toy hauler, and we're going to travel around the country, and we're going to spend time with our kids, and I'm going to work, and I'm going to speak. And so that's 100% tax deductible, but the property taxes would go along with that as well. So all of the insurance, the property taxes, business use of home and somebody is not muted. Business use of home is a huge deduction as well. Business use of home allows you to write off things like utilities, your repairs and maintenance, your property taxes, your insurance, your mortgage interest. And the other thing that most people don't realize is you can actually depreciate your home. And so many people tell me, well, Courtney, I'm scared to get audited, so I don't want to claim business use of your home. In 19 years, I've never had a client audited for business use of home. So that should knock that myth right in the bud, because at the end of the day, guys, you should take the deductions you're entitled to take, and you should not be concerned about the fact that they would trigger an audit, because none of your deductions have anything to do with you being audited. A dramatic increase in income or a dramatic decrease in income could affect your chances of being audited, but your expenses have nothing to do with it. So I just want to share that with you before we even get started into the rest of these deductions. Charitable contributions is my favorite. We'll talk about that in just a second. But you can actually write off 100% of your charitable contributions as a business expense, dependent upon the way that you give. And we'll talk about that. And now what I'm sharing with you are not minimums or maximums. They're just averages that I see. So there is no minimum or maximum amount that you can write off. Sorry, there was something there. There's no minimum or maximum amount that you can write off. You just claim your expenses, your actual expenses that you have. And so, let's say I want to share with Jennifer what I'm doing. I pick up the phone and I call Jennifer and I say, Jennifer, because me and Jennifer are friends, and I say, I've got something I'm super excited about. Let's go to lunch tomorrow. So I get in my car and I drive to Jennifer and I get to write off 58 cents a mile. Then what happens is when we get to eat, so I have a conversation with Jennifer either before, during, or after, telling her about the business that I'm doing. And I'm talking to her. And once I tell her what I'm doing, whether that be basing the product, the service, the opportunity, she may look at me and say, you know what, Courtney, I love what you're doing. I'd love to be a part of it. And that's great. I mean, that's what we want. We want to be able to help people, and we want them to be involved in what we're doing. Or she may say, you know what, Courtney, the opportunity is not for me. I'm just interested in, maybe buying your product or service. And that's great too. And the third, she may say, you know what, Courtney, I think you're crazy for doing what you're doing. I am in no way interested in this at all. And, if you've been in network marketing long enough, I'm sure you've heard that. I'm sure you've heard that people say, this is not for me. I can't even believe you're talking to me about this. And I've had some people attack me having a conversation about something that I cared about, and I cared enough about them to have that conversation. And so here's what I would say to Jennifer. Jennifer, I was just trying to share with you a way that you could not only save money in taxes, but you could also buy an amazing product at wholesale. And then on top of that, you could potentially, make some money. But at the end of the day, the guarantee is tax savings. And so Jennifer may look at me and say, what are you talking about? And obviously, Jennifer, you don't understand the difference between being a W-2 employee and a W-2 employee with a home-based business, or being a W-2 employee and a home-based business owner, because there's massive tax deductions around that. And see, because Jennifer, I had this conversation with you, and I'm not telling you guys that you got to learn all this, okay? What I'm saying is they just need to understand. They need the education of the two tax systems, and the fact that business owners pay less in taxes by doing things that they're already going to do anyway, which is opening their mouth and sharing with people a product or service that they love. So I have this conversation with Jennifer, and I'm like, Jennifer, look, because I sat down and had this conversation and told you what I was doing, I now get to write off half of my meal. So instead of you paying full price on your meal, I get to write off 50% of my meal on my taxes. So I don't have to pay taxes on that money. And I'm going to get back in my car and I'm going to drive back home. Whether you decide to join me or not, I'm going to write off 58 cents a mile. And then I wrote off the mileage on my way to you as well. And then I'm going to write off my cell phone because I needed it to run my business. I'm going to write off my internet because I needed that to run my business. I'm going to write off my laptop that's in front of me, what I shared with you on my presentation. And then on top of that, here's the thing. I can travel all around the world, growing my business, sharing with people what I'm doing, and being with my family along the way if I so choose, because I can hire them to work for me. And all of that becomes a tax deduction. And then at the end of the day, I get around the right mindset of people, and I'm able to grow a massive business because I'm doing that. I'm getting the right mindset. I'm getting the personal growth and development that I need. I'm getting the continuing education. People are actually telling me and teaching me how to get to where they have gotten because I financially benefit them, which makes total sense to me. And at the end of the day, I'm saving money in taxes along the way and spending time with my family. And I just wanted that for you. And if it's not for you, that's perfectly fine. But at the end of the day, I appreciate you having this conversation with me because I'm now able to save even more money on my taxes. And so my office supplies, my legal and professional fees, like having a conversation with me, guys, or having a conversation with a financial advisor when it relates to your business, that is 100% tax deductible for you. And things like extras, like none of these did we actually spend any extra money for. These were already expenses that we had, which is so funny to me. Like I'll have, I get a good view of the world and the network marketing world and the outside world just by being here and having conversations with people every single day on tax strategy sessions. And I'll have spouses that'll call and say, my wife is costing me money. And I'm like, no, what your wife is doing is allowing you guys to be able to write off the things you were already spending money on yesterday. The only difference is now you get to take them as a tax deduction. And the money that your wife made, she's not paying taxes on it because on paper, it looks like you have a loss. And guess what? That loss now offsets against your income, and your wife is helping you keep more of your money. So the last time I checked, I think you should go apologize to your wife for ever saying that to her. But the second thing you need to do is understand that she's helping you keep more of your money instead of it being wasted away in taxes. And so when people understand, they just don't comprehend it, guys. So, the extra expenses that you may have are so worth it, like things like advertising, continuing education, which I will tell you, I'm a platinum partner with Tony Robbins. That cost me $85,000 a year. And you may look at me and say, there's no way on earth, like there's no way I could spend that kind of money. It grew my business. It took my business from making $97,000 a year 2 years ago to making $2.3 million this year. So what I will tell you is that people you decide to hang around with are going to massively either grow you or destroy you. And the great thing about being in the network marketing industry is you get to spend a lot less money to be around people, and they will help you grow as well as make money at the same time. Whereas I have to go to Tony Robbins to get the support that I need. So the next thing would be like dues. So your monthly dues, if you had any for your business. And then you've got cost of goods sold, but everybody has these anyway. They're just considered products. They're products that you're not ever going to make any money off of if you were just a W-2 employee. So cost of goods sold are huge. Like if you're giving away samples, or if you're selling product, or if you're taking the product and sharing that with people to have a story, as long as you're advertising and marketing that, then that would be a tax deduction for you as well. And so I want to address this one thing, guys. I am not telling you in any way to join any company and not tell anybody about it for tax savings. I'm telling you that you have to attempt to earn an income in some way in order to take advantage of the massive tax deductions. But the more you open your mouth, the more things that you do, the more money that you're going to save in taxes. And as you continue to save money in taxes and do the things you're supposed to do, which is go to events and share with people what you're doing, you will start making more money. It's just the way it works. So I'm not even going to use this number, but I want you to look there on the bottom right-hand corner. It's $35,000. These are just minimum deductions that, not minimums, but these are kind of averages that I see. And there's a lot more things. There's actually 475 tax deductions that you can have by having a business. So, and these are just a handful. But here's what I want you to understand. By having a home-based business, and let's add this into, like we would say, this is our tax return here. So now we have the same income. Let's say we haven't made a dime. We're not really good at telling people about it, or we're not good at asking. I tend to find that very often, especially in the nutrition industry. We're really good at telling people about the product, but nobody really ever actually asks people to buy that product. And that's what hinders people from actually buying the product, because they don't even know how to do it. So you have your income, you have your business expenses, and I just used $25,000. I didn't use the $35,000 number. We've got our standard deduction, our taxable income, our taxes, our take home, our cost of living, and here's what's left over, guys. So you haven't made an extra dollar in your business right now, but because you joined a home-based business, if you're single, that's roughly $5,600 a year in savings, in tax savings, and take-home pay, or $4,500 if you're married. So you'd have to make an additional $3.79 an hour, or $3.05 an hour if you're married, to 2,000 hours a year. So the average person works 2,000 hours a year to be equivalent to the tax savings of having a home-based business. So, I would definitely rather have a home-based business than to go out and make more streams of income, like a second job. Otherwise, all you're going to do is put yourself in a higher tax bracket. What this is doing is allowing you to make money and forcing you almost into a lower tax bracket for some people as you continue to build. Now, here's what happens. If you let's say you made an extra $500 a month. A lot of people say, well, I don't want to make any more money. I've had people say that before. I'm not interested in making more money because I got to pay more taxes. That's not the way it works in the network marketing industry or the home-based business industry. You can make more money and pay a lot less in taxes. So you've got a single person, let's say single and married, they made an additional $500 a month. Look what happens, guys. Look at the difference in the taxes. Just if you don't catch anything I'm saying here, because you now have a home-based business, making an additional $500 a month, you're paying less in taxes, and your take-home pay is $10,500 if you're single, $9,500 if you're married. So you'd have to make an additional $7 an hour to be equivalent to the amount of money that you would bring home by having an additional $500 a month because of the tax benefits. So it's like a double whammy. You're making more money and paying less in taxes, which then brings you more money home on take home. And guys, it's not about how much money you make. It's about how much money you keep. If you tell me you're a W-2 employee and I make six figures, no, you don't. You're giving half of that away typically to the IRS. So how much money are you bringing home? That's what I'm concerned about. And I want to be able to match that as a business owner, because I showed my staff a couple weeks ago, I was doing a training for them, and I showed them where they could make $60,000 a year, pay on average of $14,000 in taxes. And I, as a business owner, and I have not been a W-2 employee for 19 years. So I have a complete different understanding as a W-2 employee. And I'm not knocking you if you are a W-2 employee. I'm just telling you here the facts. And that's what I work off of. I work off of tax code. I can make $450,000 a year, buy everything that I want, and still receive a $10,000 tax credit. And I showed them that on paper. And it floored some of them, because you've got to understand that as a business owner, we make our money. We get to buy a lot of our needs and our wants, especially for home-based business owners, because things we're already spending money on, buying vehicles, business use of their home. Like I have a swimming pool. That's a fringe benefit because I have employees. My employees are my children. So now I can write off my swimming pool. All athletic facility, all of these things can become tax deductible. And at the end of the day, what's left over, we pay taxes on as business owners. If there's anything left over. Amazon had nothing left over for 20 years in a row. And last year they made $11.2 billion and paid $0 in taxes because they know the rules to the game. Now, as a W-2 employee, you have no say-so. You make money and pay taxes. Business owner makes money, buys their stuff, pays taxes. W-2 employee makes money, pays taxes. There's not as much left over. So you just have to understand that. So next up, I want to just go into detail on a couple things. The vehicle deductions, these are huge, guys. You can save tens of thousands of dollars over your lifetime over vehicle deductions. Just this year, we saved $40,000 in taxes for 2019 just by buying vehicles. I'm not telling you to go out and buy a vehicle that you don't want. I'm just saying if you do go buy a vehicle, here's the benefits of it. You get either write off 58 cents a mile. So let's say you had 15,000 miles on your vehicle for business purposes this past year. 58 cents a mile, that's $8,700 that you can write off. So you can't claim anything else like gas, oil changes, repairs and maintenance. There's no depreciation. You just claim the mileage. This used to be the best way to go until the tax laws were changed in 2018. And so if you bought a newer vehicle, it's more than likely going to be better to take actual expenses. And what are actual expenses and how do you determine them? So you first have to determine the business use percentage, which is the business miles over total miles. That gives you your percentage of business use. And so if we had 8,000 total miles or business miles divided by 10,000 miles total, that would be 80%. And so from there, we can write off gas, oil changes, repairs and maintenance, interest on the car washes. All of these can be written off. And so you multiply the total by the business use percentage. So if we had 12,000 actual expenses and you use the vehicle 80% for business purposes, that would be $9,600. Now I want to address something here. So many people tell me, I had 25% business use on my car. And they're using their vehicle 100, they're using their business, like their Juice Plus business or their network marketing business is 100% like their income. And so my question is like, what else are you doing? Like, I don't understand. Are you not actively building your business? Because 25% seems super, super low. What I would tell you is that if you use your vehicle more than 50%, it is a huge difference in the depreciation and the amount that you can write off. So, I would think, am I going to the supermarket to have a conversation with someone? Am I going out to eat to have a conversation with someone? Like, what are the things that I'm actually doing in order to grow my business? And can I determine, am I intending to grow my business when I'm out and about? And if you are, then that business use percentage should be higher. So that's just a thought, just to help you understand. Now, on top of actual expenses, you can also depreciate the vehicle. So, and I'll give you for instance on it. Any vehicle, this is not relevant for any vehicle that's over 6,000 pounds. Now, you can Google GVW, which is gross vehicle weight, of any vehicle that you own. If you have a vehicle that's over 6,000 pounds, you can actually write off 100% of that vehicle in the year that you buy it up to your net income. So that may be a huge deal for you. So last year we bought a Suburban, a 2019 Suburban. It was a $65,000 Suburban. That entitled us to about $28,000 in tax savings last year. We also, at the very end of the year, bought a Cadillac XT6, which is not 6,000 gross vehicle weight, and the limits apply here. So in 2017, just so to give you a comparison of what happened with the depreciation, the laws changed January 1st, 2018. And so there's a current law and there's an old law. So if you had a vehicle prior to January 1st, 2018, when you bought it, then you would apply the 2017 rates. If you have a vehicle that's after January 1st, 2018, then you would apply the current rates. And the reason why it's important is that depreciation increased 3 times. So you can write off a car, a $50,000 BMW, 3 times faster than what you could before. It used to take 18 years to write off a luxury car, is what they consider it. And then now it takes 5.3. So the reason why that's important, things like that Cadillac XT6, I could have kept the BMW that I had a 528i, I think, or 535i. I could have kept that BMW, but I would have been in year 4 with that BMW. And look, I would have gotten an $1,875 tax deduction as depreciation. Or I could have bought the Cadillac XT6 that I bought and I received a $10,000 deduction. Guys, the thing is that's $8,000 in tax saving or tax deductions, which for me, that saved me about $4,000 in taxes. Now, that $4,000 in taxes pretty much paid for half of my payments. Like I was going to have to pay for the BMW anyway. Now I'm getting an $8,000 tax deduction and I'm paying the same amount of money in taxes. So when you see someone that's constantly buying new vehicles over and over again every couple of years, it's because of the depreciation and how much you get. Now, here's the cool part. I could either take the next level, $1,875, like 2020, it would have been the 5th year, which would have been an $1,875 deduction, or I could take a $16,000 deduction. Now, with the depreciation, I'm paying for my car payment. And so when you understand that, it's either pay taxes or pay the car payment, like I'm getting the car payment back in tax savings. So when you understand these rules, like we just talked about, it becomes a lot of fun. So as you continue to grow, things will start making sense. But, if you're in the market to buy a vehicle, I don't suggest you lease one right now, because leasing, you can only take actual expenses. As you can see, depreciating, especially if you are in a high income level this year, as you're continuing to grow, a vehicle might make sense for you because it's going to save you a ton of money. We just bought a toy hauler and a truck to pull it. That is about $140,000 for the two. I think it's going to be a little bit more because we have to go trade in. We have to get a different truck. We got to get a bigger truck than what we thought we needed last week. So anyway, that's about $140,000 in tax deductions. No, you don't have to pay the money up front. But here's the thing, we bought the vehicles. It didn't even have to put a down payment on them. And by doing so, we now have advantage of the depreciation on those vehicles. And so it's going to save me about $60,000 this year in taxes, which is almost the cost of a truck. So I hope that makes sense. Hope that clicks. So hiring your kids, huge deal. It's one of my favorite. You can hire your kids and pay them to do what you would pay anyone else to do. So you can hire them. So kids are expensive. You hire them, they pay for their things instead of you paying for your things or you paying for their things. If you pay for their things, that is not a tax deduction. But if you hire them, that is a tax deduction, and then they can go in turn and pay for their things, allowing you to have more money for them to have more money so that they can pay for more things. Or you just keep more of your money, either way you want to work it. So here's the thing. If they're over the age of 18, you would have to withhold FICA. But if they're under 18 or younger, you can withhold. There's no taxes that have to come out. There's no FICA taxes. They don't have to pay FICA taxes. There's no state or federal taxes that they have to pay. And the first $12,000 a year is called income shifting. So you're shifting income off of yourself and onto your children who are at a lower tax bracket. But here's the cool part. In the United States, everyone's entitled to a standard deduction. So the first $12,000, they pay no taxes on it. Yes, you can pay them more money than that, but the first $12,000, they don't have to pay taxes on. It's all a 100% tax deduction for you as a business expense. So that's a huge deal. So there's no unemployment taxes, no FICA, huge deal. Yes, if they're under the age of, and I'll tell you, most people have questions. What age can you pay them? At age 7, it's been held up in tax court as precedent. So you definitely can hire them at age 7. Now, I've hired my children younger than that. I don't pay them quite as much. I pay them about $500 a year. But here's the thing. You can hire them to be models. You can hire them to be personal assistants. You can hire them to go with you and help set up an event. I have a daughter right outside right now of my office. She is a full-time tax preparer for me. She's worked alongside me for the last 2 years. And so she's 18 years old, just turned 18. She also owns 10% of this company. So we're starting to shift off the percentage of ownership. 1, it helps with estate planning, but 2, it massively saves us money on taxes. And then 3, our children have ownership of the company. So it's pretty amazing to be a part of that. So hiring your kids, huge deal. Now, and this should say social business. I don't know how that changed to hire your kids, but here's the last one I'll go into detail on is something called social giving. And I know this, if you help enough people get exactly what they want, you'll automatically get what you want. And I think by nature, here we go. I think by nature, that's exactly what happens in the network marketing space. It's something that you have to do. You have to help others become successful in order for you to become successful. You have to help others understand and be educated about a product in order for you to be more successful, because you've got to educate in order to sell. And that's exactly what we do on a daily basis. And so I took that a step further in April of 2018, and we developed something called a social business. And that social business means that we give from a gross income level. And why that's important is 2 things. 1, it connects our clients to our giving, and it connects our staff to our giving. So it becomes part of our everyday culture. So it shifted everything for us to giving as opposed to receiving. The second thing is the massive tax deductions around it. So if you give from a gross income level instead of a net income level, by doing so, you now developed 100% tax deduction as something called a cost of goods sold item. So it doesn't have to be for every dollar. It can be for every product that you sell. It could be for every service that you offer. It could be for every customer that you receive. the fact is it has to be a part of your model, and it has to be a part of the top line instead of the bottom line. So many people, so many businesses especially give from their bottom line, and that is not benefiting the business. And the reason why is it pushes off, even if you do give from a business, that it pushes off to charitable contributions, and most people are not getting benefit. Like I said, 96% of Americans aren't getting benefit. And when we started this social business, I couldn't fathom how much it impacted our lives today. But right now, as of July 3rd, July 29th, we are currently feeding roughly 7,800 servings of food to children in need every single day. We work with malnourished children all over the entire world, and also medically fragile children here in the United States with a nonprofit called Manna Relief. And so this has been life-changing for me, guys. I love freeing up money for people, but there's nothing like the giving aspect. And then we added on Operation Underground Railroad. So for every $1 that you spend with us, you're providing a serving of whole food, plant-based nutrition to children in need. For every $25,000 that people spend with us, we are freeing a child from sex trafficking through Operation Underground Railroad. And then the third thing is that we provide safe drinking water. For every $150 that comes through our accounting practice, we are providing safe drinking water to the entire country right now of Liberia. And so connecting those together, my mission in life is to teach more how to have more so that they can live more, than they can give more. And then I can nourish more. So I can feed and provide safe water, and then I can free more children. And so that's what I was put on this earth to do. And when you realize that, the sky's the limit, because we don't work anymore for money. We work to free up money for people so that they can have more, they can live more, they can then give more, and then we in turn can do the exact same thing. So I just wanted to share that. The last thing, as far as how do I keep more of my hard-earned money, and then I'll go into just kind of like a summary detail for you guys. When you start making money in the network marketing space, and for those of you that aren't making any money yet, or those of you that are making a lot of money, I get to see it from the ground up. I get to see people are making nothing and they're saving $4,000 to $7,000 a year in taxes. I also get to see clients that are making $24 million a year in the network marketing industry. So it is very, very real. And the thing is most people don't comprehend or understand the network marketing industry and all the deductions that they're entitled to take by having that home-based business. So how do you keep more money when you start making it? One of the biggest things that I see is that people do not have their structure in place with their business, especially in the network marketing space. So when you get to a point where you're making more than $1,000 a month, you need an LLC immediately. Like, first step, you need an LLC. And the reason why is, one, it doesn't really do anything for taxes when you develop the LLC, but what it does is it limits your liability. And you may be saying, I don't need to limit my liability. I'm a nutrition company, or I'm in a network marketing business. I get it. That's not the purpose. The point is that you have this limited liability company now, and you get to choose. You either get to treat that limited liability company as a sole proprietorship, which most of you will, and most people do, and they're overpaying in taxes. And the reason why is because you can actually, or you can treat your LLC as something called an S Corp election for tax purposes. And an S corporation is nothing more than a small corporation, and the tax laws around it allow you to bypass 80% of the self-employment taxes that you would have paid. And so what do I mean by that? When you make money, okay, if you have any sort of ordinary income, if you're a W-2 employee, you're going to pay FICA taxes. Most people don't realize that. They're paying FICA taxes, which is Social Security and Medicare. So that is 7.65% of your income. It comes out. You don't get a say-so. Now, matching that is your employer. So my employees out here, they pay 7.65%. I then match that 7.65%. Well, when you become a business owner, you have to pay the matching FICA because you are the employee, considered to be the employee and the employer. So you pay 15.3%, but there's a way around it. And you're only paying it on your net income, which is your bottom line number, as opposed to a W-2 employee is paying it on their top line. So from there, after you do that, let's say $60,000 is the income, you would pay 15.3% of that income, that net income, in self-employment taxes. If you were either just an LLC, a sole proprietorship, or a partnership, okay? The minute you decide, so, and you're paying $9,000 in self-employment taxes on top of federal and state taxes. Now, when you decide to become an S Corp election or just an S Corp, and the reason why I tell people to do the LLC treated as an S Corp, because you have some options and it's thousands of dollars cheaper than having just an S Corp, because you've got to go to an attorney and they write up all the paperwork. It's just a lot of work. So anyway, that S Corp election will allow you to bypass 80% of that number, which is $7,000. Huge deal. It's like $7,300. And the only thing that really you need to know right now, because I know I've thrown a lot at you guys and I don't want you to be overwhelmed. We can do all these things. It's not something that you necessarily have to do. But for a couple $100, like, it's not a lot of money to set these things up properly so that you're saving money. Once you hit a point where you're making $1,000 a month as an LLC, or once you're making $1,000 a month, you need an LLC. And the reason why I say that is when the clock starts ticking. So, and I'll give you an example. The clients that I just got off the phone with who are in Juice Plus, making $150,000 a year, if they had an LLC and have had it for years, so no one treated that LLC as an S corporation. So here's what I could do. I can go backwards to 2017 today. I can amend their 2017 personal tax return, create a corporate tax return for them, and save them $12,000 a year minimum in self-employment taxes because they decided to have an LLC. Now, the accountant did not treat it properly, so I have to go back and amend and give them a corporate return and a personal tax return, but we can go backwards and do that. And that's what I'm saying. The clock starts ticking the day that you have the LLC in place. So if you later decide, well, I should have been an S Corp this whole entire time, you can go backwards and treat your LLC as an S Corp election for tax purposes. So that's how that works. An interview or what? Okay, they need to wait. Let me finish this. Sorry, guys, I have another appointment, but we're good. I want to finish this. Okay, so here's what I want you to understand. There's never been a better time to have some sort of home-based business. Seriously, find something, share this information with people. Your friends and family need a business. Like I said, 46% of Americans don't owe an extra $400 to their name. The system was broken before the pandemic. Okay, it is not getting any better if you just continue to stay as a W-2 employee. And I would do everything you can humanly possibly do to build your business up in the event that something else happens. Right? I just want to share that from my heart. Take the deductions that you're entitled to take. Don't let anyone tell you that you're not entitled to take those. If you're attempting to earn income, take those deductions. Hire your spouse and kids for massive extra deductions that you can take advantage of, especially fringe benefits. Here's this one is very important. Hire an accountant. Do not do your own tax returns. I have 3 clients right now that are dealing with audits from when they prepared their own tax returns in TurboTax, and it is a mess. And I want you to and it wasn't they were not audited because they had a business. They were audited because they checked the box incorrectly and they caused themselves to be audited that had nothing to do with their business. And so the last part of that is that when you do hire an accountant, you need to hire someone who actually understands the accounting, the network marketing industry, so that you're not overpaying in taxes and that they're helping you with strategy, not just prepare your tax return. Because guys, I'll tell you this all day long. You will not find very many accountants that are going to tell you what you should do for your business. What they're going to do is take your information and they're going to prepare your tax return. That's why they're called tax preparers. They're not tax strategists, okay? So you've got to understand that there's a difference, and it's your job in order to understand what deductions that you can take advantage of and take advantage of those deductions. And so the last part is tracking your expenses. It is crucial and imperative, one, for the growth of your business, because what you don't track, you can't measure, okay? So I don't know how in the world you can grow a business if you're not tracking your income and expenses every single month. How many people you're talking to, how many people are signing up in your company, how many people are buying your product. That is just doing business like the way you're supposed to do business. But the second thing is that you, for
getting
you have to have some sort of
So he's just going to bring a load for the front.
Okay, guys, so we are going to stop the video right there. Tell me that was not some good stuff. Oh my gosh. Are you guys like blown away, right? Incredible information. Everyone needs to hear this. Like, please share this with your friends. If you want the recording, I will be sharing the recording with you. Send me a message or send the person who invited you on here this message. And just know that a lot of people on here are a part of one of the best network marketing companies that's out there. Seriously, second to none. I have been a part of this business for 10 years. And I realize now why in the beginning, when I wasn't making a lot, that we were seeing what she's sharing about the tax savings. It was the tax savings that was just keeping us like afloat. And now it's just like, we're also making more, but then we still have these tax savings. It's incredible, guys. Everyone needs to have a at-home business. Everyone is trying to have these side hustles where they're putting in time to make extra income, where they could just be at home sharing something that they're really passionate about and still saving money. So glad you guys could join in and hear this with us, because I know it has just blown me away. And I'm so grateful I said yes to this opportunity 10 years ago, because, oh my gosh, I just feel like the blessings just keep on showing up. And this has definitely been a blessing in my life. Thank you so much, Alicia, for doing this alongside me and sharing your story. And guys, have a great night. I hope you are pumped up. If you don't have an at-home business, get with the person who invited you on here. Sign up today. You need one right away. All right, guys, have a great night. You can unmute if you want.
Love it.